Good evening, everyone. It's Tuesday, April the 14th, and I'm just going to give you another weekly update on what's going on in our markets. But first, I'd like to call your attention to the CARES Act in response to the COVID virus pandemic that spread across the country. Financially, the CARES Act allows us to do a couple of things. First of all, it allows us to extend our income taxes that normally is ending on April 15th. We can now extend our tax returns and payments to July 15th. Also, any taxable distributions of up to $100,000 from your IRA can be paid back within a 3-year period. So they're kind of releasing some of the pain there. Also, you do not have to take your required minimum distributions this year. So if you have been taking them on a monthly basis, you are now allowed to suspend them to allow your accounts to grow for the balance of the year and then restart those required distributions beginning January of 2021. So that's the good news with the CARES Act. Also, listening to some of the financial investment companies' webinars last week and this week, they're coming up with some pretty key ideas regarding this last uptick in the markets. We're up close to 27% since the very low bottom in the middle of March. We're up about 27%. Again, today we're up another 550 some odd points. So we're just closing in on the Dow at about 24,000, which is only about 5,000 points below where we were before this all started to decline. One of the biggest takeaways from the webinars is that dollar cost averaging is really, really important. And what dollar cost averaging is, it's incremental investments back into the market, especially in your existing portfolios. So now that the markets and the values of your accounts may have declined somewhat, now's the time to take some of that extra cash that you have sitting on the sidelines and incrementally on a weekly or a monthly basis, reinvest that into your portfolio. And when the markets do have their snapback, then you'll realize a larger gain with the dollar cost averaging. For those of you that decided to get out of the markets completely, now would be a very good time to start incrementally coming back in a little bit at a time, whatever your comfort zone might be. So this is very key as far as the dollar cost averaging and improving the value of your portfolio. They wanted to remind us in these webinars that if you look at your beginning of the 2019 balance of your portfolio and you look at it today, it may not be that different. Essentially what we did was we gave back most of what we earned last year, but we haven't given away years and years and years of increase in values. If you want to kind of test that a little bit, you can go back 5 years and look at all the year-ending balances of your portfolio accounts at the end of each of those 5 years. And you'll see how well you've done. So right now we've only really given back the gains from last year to a point. So that's actually not bad news. The government stimulus has given us at least a quarter or two to kind of keep our heads above water. The stimulus checks are being mailed out or deposited into your bank accounts as we speak. Hopefully you'll realize those pending in your bank accounts by the end of the week. The markets, we're hoping for the rebound sometime in third quarter, so the government stimulus is probably going to go a long way to helping us give us that cushion that we need. And lastly, the Fed is right now buying up corporate bonds, and when they do that, they're actually giving a loan to the corporations for a payback at some future time. So they're infusing all these corporate bondholders, corporate bonds, with some cash. So that might be a good play for you to look at if you're looking to get back into the markets, to start in with an income portfolio and start incrementally adding back into your fixed income portfolio, even perhaps a high yield portfolio at this point. So that said, I think it's a good idea to now really start thinking about incrementally getting back into the markets. As I mentioned in my last blast email, now's the time to start sneaking back into the markets because the markets will rebound way before any of this virus thing starts to diminish. So I think the markets are telling us a little story. It's just really probably a very good time to start incrementally going back into your portfolios. And if you have any questions, feel free to give me a call. I'm here at 401 596 6600. Thank you for your time this evening. I hope you have a pleasant night. Hope you're staying safe, and my best to all your loved ones.